Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about the exciting world of cryptocurrency. Now, it's been some time since I last did a video on cryptocurrency. It was at the time of the FTX debacle, when Sam Bankman-Fried, who was the founder of the second largest cryptocurrency exchange in the world, FTX, was arrested on fraud charges, and that threw the whole of the cryptocurrency market into a complete state of disarray because a number of other companies had also gone down around that time, and there was a general loss of confidence in the world of cryptocurrency. And one of the reasons why there's still a large question mark hanging over the world of cryptocurrency and the potential for it to become mainstream is because of criminal activity. Even though the blockchain records every single transaction, and therefore theoretically everything should be fully traceable, there are ways and means of being able to disguise the origin of your cryptocurrency. Tumblers and mixers may be things that you currently associate with the world of cocktails. However, in the world of cryptocurrency, these are businesses that allow you to mix your cryptocurrency with other people's cryptocurrencies and then be able to take it back completely clean. So it means that criminals can take their dirty crypto, wash it through the tumblers or mixers, and then be able to use it in a legitimate format. So in today's episode, we'll have a look at the role of tumblers and mixers and talk about what the US authorities are doing about them. We'll then go on to talk about China, which isn't something that I've covered in cryptocurrency videos before, because crypto is illegal in China. The authorities have outlawed the use of it entirely. However, that hasn't stopped Chinese companies using it. And the fact that Chinese businesses are using cryptocurrency is now actually proving to be a big problem with regards to illegal drugs in the USA. It's been alleged that Chinese chemical companies are taking large payments of crypto for the delivery of drugs, which are subsequently used by Mexican cartels to produce the man-made opiate fentanyl, which is 50 times stronger than heroin and is now the biggest single killer of all drugs on the streets in America. And using cryptocurrency for crime and illegal payments is still a big issue, and money laundering is one of the biggest problems that the authorities are facing. I'll then go on to give you an update as to what's happening in Russia in cryptocurrency, and you'll be pleased to hear that the cryptocurrency businesses that are operating in Russia are not immune to what's going on in terms of the war. As you'll probably be aware if you've been following the channel, there are lots of companies that have had their assets seized or have been forced to sell as a result of Russia's invasion of Ukraine, and BINANCE is the latest company to fall victim to this, so I'll give you an update on that. And then finally today, if you're interested in crypto, if you like to take a punt on these things, I'll provide you with an update from Standard Chartered, who are claiming that they've identified a cryptocurrency that could potentially increase 5 times in value over the course of the next few years. And then finally today I'll wrap up with my summary of the crypto market and what the authorities can do to try to stamp out the continued use of cryptocurrencies by criminal organisations. But before we get into all of that, I just wanted to say once again, thank you very much for all of the great comments that you've been posting. Please keep those coming. And if you'd like to see more face-to-face videos like this and find a way of avoiding all of the adverts that you're bombarded with on YouTube, then please check out my Patreon channel. However, if you don't like Patreon and you'd like to support the channel, please have a look below where you'll find links to buymeacoffee.com as well as YouTube's super thanks and membership scheme. Fentanyl is a synthetic opioid that is up to 50 times stronger than heroin and 100 times stronger than morphine, and is a major contributor to both fatal and non-fatal overdoses in the USA. There are 2 types of fentanyl available: pharmaceutical fentanyl and illegally made fentanyl. Pharmaceutical fentanyl is prescribed by doctors to treat severe pain, especially after surgery and for advanced stage cancer. However, most recent cases of fentanyl-related overdoses are linked to illegally made fentanyl, which is distributed through illegal drug markets for its heroin-like effect. It's also added to other drugs because of its extreme potency, which makes drugs cheaper, more powerful, more addictive, and more dangerous. Illegally made fentanyl is available on the drug market in different forms, including liquid and powder. Powdered fentanyl looks just like many other drugs and is commonly mixed with other drugs like heroin and cocaine, and made into pills that are made to resemble other prescription opioids. Fentanyl-laced drugs are extremely dangerous, and many people are unaware that their drugs have been laced with fentanyl. In its liquid form, illegally made fentanyl can be found in nasal sprays, eye drops, and dropped onto paper or small candles. And in 2022, 73,654 people died from fentanyl overdoses in the USA, which represents more than 200 people per day. Crypto transactions related to illicit activity hit a record $20 billion in 2022. and blockchain analytics company Chainalysis have identified tens of millions of dollars worth of cryptocurrency payments relating directly to the supply of fentanyl. And Chainalysis has identified dozens of cryptocurrency wallet addresses which have very similar patterns of activity to 4 addresses already identified by authorities as belonging to Chinese chemical shops. China has said there is no illegal trafficking of fentanyl between China and Mexico. However, the USA believes that Chinese traffickers have shifted from manufacturing finished fentanyl to mostly exporting the precursor chemicals to Mexican cartels, who then make and deliver the final product. The crypto wallet addresses these sellers provided have received $27 million worth of cryptocurrency payments, mostly in Bitcoin. Chainalysis said the crypto transaction volume to Chinese chemical shops correlates positively with fentanyl-related drug seizures at the US-Mexico border. Together, these addresses have received more than $37.8 million of cryptocurrency since 2018, Chainalysis said, saying that the true cryptocurrency volume total is likely much higher. Many drug traffickers use crypto in an attempt to evade law enforcement, thus facilitating the ongoing opioid epidemic in the United States and other drug-related crises worldwide. The report echoes findings by blockchain researcher Elliptic, which found 90 Chinese-based companies willing to sell fentanyl precursor chemicals, 90% of which accepted cryptocurrency payments. The crypto wallet addresses that these sellers provided have received $27 million worth of cryptocurrency payments, mostly in Bitcoin. And this issue has been raised in the US Senate by Senator Elizabeth Warren, who told the Senate, "Fentanyl is fueling the most severe drug crisis our country has ever seen. In 2022, synthetic opioids like fentanyl were responsible for 75,000 deaths, more than 2/3 of all drug overdose deaths last year. Fentanyl is now the leading cause of death among Americans 18 to 45. China is the leading supplier of the chemical ingredients called precursors that drug cartels use to produce fentanyl and other synthetic opioids. China also plays a major role in laundering money for the cartels." She went on to say that Elliptic's research found that 90 Chinese suppliers sold enough precursor drugs in exchange for crypto to produce $54 billion worth of fentanyl pills. That is enough fentanyl to kill nearly 9 billion people, all paid for by crypto. When one of these companies was asked whether their Mexico-based customers paid in crypto, they replied that the cartels, and I'm going to quote, always used Tether or Bitcoin to pay. It is no problem. Now the Office of National Drug Control Policy has identified crypto as, quote, central to the rise of drug sales in the United States. I believe that Congress has talked about fentanyl long enough. We propose to do something to fight back, and that is why we are reintroducing our Digital Asset Anti-Money Laundering Act, which closes loopholes in our anti-money laundering rules and cuts off drug suppliers and cartels from using crypto to fuel their illegal business. Crypto is helping fund the fentanyl trade, and we have the power to shut that down. A cryptocurrency tumbler, or mixing service, is a service that mixes potentially identifiable or tainted cryptocurrency funds with others so as to obscure the trail back to the fund's original source. This is usually done by pooling funds from different sources and then splitting them back out to destination addresses. As all the funds are lumped together and then distributed at random times, it's very difficult to trace the origin of those coins. Tumblers arose to improve the anonymity of cryptocurrencies, usually Bitcoin, since the digital currencies provide a public ledger of all transactions. Due to its goal of anonymity, tumblers have often been used to launder money. There are essentially 2 different types of crypto tumbler. A trusted custodial tumbler is a situation whereby you deposit your cryptocurrency, wait for a period of time, and then the custodian pays out your cryptocurrency minus a fee of up to 3%. However, the problem with these arrangements is that there is a risk that your cryptocurrency could be stolen by the custodian. The alternative arrangement is a non-custodial mixer, whereby 2 smart contracts are put into place, being a simultaneous deposit contract and withdrawal contract. The question of whether crypto coin mixing services are illegal is determined by the jurisdiction in which you reside. The USA has identified these businesses as illegal and therefore outlawed them, evidenced by the fact that Tumblr's Blender and Tornado Cash were both sanctioned by the United States Department of Treasury, making it illegal for US citizens, residents, and companies to use their services. However, many of these tumblers and mixers still exist globally and therefore provide a way of criminals being able to launder their currency. Cryptocurrency exchange BINANCE has announced that it will sell its Russian business to newly launched exchange COMEX, becoming the latest company to pull out of Moscow since the country began its war against Ukraine. Binance, which is the world's largest cryptocurrency exchange, did not disclose financial details of the deal, but stated that it will have no ongoing revenue split from the sale, nor will it maintain an option to buy back shares in the business. Chief Compliance Officer Noah Perlman said, "As we look towards the future, we recognise that operating in Russia is not compatible with Binance's compliance strategy." Binance also said that all assets of its existing Russian users were safe and that there would be an orderly process for the migration of users. The divestment process will take up to 1 year, it added. COMEX is a centralised cryptocurrency exchange backed by crypto venture capitalists, according to its website. The company only launched its exchange the day before the deal was announced and did not respond to requests for comment on the Binance deal. In a recent research report, Jeff Kendrick, head of FX research at Standard Chartered, announced that cryptocurrency Ether may hit $8,000 over the next 2 years as it becomes more widely used in blockchain-based covenants known as smart contracts, as well as gaming and the tokenization of traditional assets. Ether is currently trading at around $1,600 per coin. We see the 8,000 level as a stepping stone to our long-term structural valuation estimate of 26,000 to 35,000, wrote Kendrick, who also heads the bank's digital asset research. That valuation assumes future use cases and revenue streams that may not have emerged yet, although the real-world use cases of gaming and tokenization should support their development. Ether has gained around 30% this year, though remains almost 70% below its all-time high of around $4,900, which it hit in November 2021. Standard Chartered said in July that top cryptocurrency Bitcoin could reach $50,000 this year and $120,000 by the end of 2024. Bitcoin is currently trading at around $27,000. This chart shows the total market capitalization of all cryptocurrencies in issuance dating back to the start of 2020. And this shows that at the start of 2020, the total market capitalization was around $200 billion. However, as the excitement and frenzy surrounding cryptocurrency started to rise in 2021, we saw the total market capitalization get up to around $3 trillion, which represents a 15 times increase in a 2-year period. Quite remarkable. However, unfortunately for the cryptocurrency markets, 2022 was a complete disaster, and by the end of that year, the total market capitalization of all currencies in issuance was down to less than $1 trillion. So 2/3 of the value of the market was completely wiped out in a 12-month period. Now, since that time, the market capitalization has recovered slightly. However, today it's sitting at just above $1 trillion, which is where it was back at the start of 2021. And this chart shows the monthly volume of cryptocurrency transactions dating back to April 2022. And you can see here there is a clear downward trend. So as the market has fallen in value and cryptocurrencies themselves have reduced, the volume of trading is also reduced. And this basically represents people leaving the cryptocurrency market. Less people are involved today than they were in 2021 when the frenzy was going on. And this chart shows the volume of US venture capital investments into cryptocurrency and blockchain companies in billions of dollars dating back to the start of 2020. And what this shows is that as excitement in the market rose and everybody started to believe the story that cryptocurrency was the financial revolution, a huge volume of cash was invested into cryptocurrency businesses by venture capital companies. And in the first quarter of 2022, US venture capital companies invested over $6 billion into crypto businesses. However, since that time, the value of investments has fallen significantly. And in the third quarter of 2023, the total amount invested was less than $500 million. And this really shows that the cryptocurrency markets have still not become a mainstream form of payment and are still suffering from the fallout of the FTX collapse. This chart shows the movement in the price of Bitcoin dating back to 2019. At the start of 2019, one Bitcoin was trading for $3,800. During 2019 and the first 3 quarters of 2020, the price crept up, and by September 2020, one Bitcoin was trading for around $11,000. However, demand for Bitcoin then went crazy, and by April 2021, one Bitcoin was trading for around $60,000, and by November that year, Bitcoin was trading for around $69,000. And at that time, there was a lot of speculation that Bitcoin was going to go all the way to $100,000 per coin. However, unfortunately for Bitcoin investors, that didn't happen, and we saw a major collapse in the price of Bitcoin. And in 2022, we saw the collapse of a lot of cryptocurrency businesses, the highest profile of which was Sam Bankman-Fried's FTX, which filed for bankruptcy in November. And around that time, Bitcoin hit a low of 14,000. Now, the price of Bitcoin has subsequently recovered slightly and is now trading for around 27,000 per coin, which is actually where the price was back in December 2020. So despite the huge rise in value that was seen in 2021, Bitcoin investors today are back where they were 3 years ago. So what's the summary and conclusion today? Well, I wanted to post this video firstly to give you an update as to what's happening in the world of cryptocurrency. And I think what's happened over the course of the last 3 years is really fascinating. 2021 was the boom year for cryptocurrency. That was the time when everybody thought that there was a financial revolution potentially in the offing, that everybody was going to abandon fiat currencies and move to the world of crypto, and that it would become an established platform that every company in the world would be using in 2 or 3 years' time. And as a result of that, the price of a lot of the coins went through the roof. And at one stage, Bitcoin rose to around $69,000 per single coin. However, unfortunately for the world of crypto, 2022 proved to be a turning point, and a lot of companies got themselves into financial difficulty. They were proven to be either fraudulent or overtrading or misappropriating customer funds, and as a result of that, a lot of confidence was lost in the crypto markets, and we saw a collapse in the value of a lot of the coins, and the market cap went from a high of around $3 trillion to the current level of around $1 trillion. So that is a complete wipeout on anybody's scale. And the value of Bitcoin today is trading for around about $27,000 per coin, which is actually where it was in December 2020. So if you've been holding Bitcoin for the last 3 years, you would have broken even. You haven't made a cent. On paper, you would have made quite a lot of profit in 2021. Then you would have had quite a lot of losses in 2022. And now it's somewhere around the middle. So basically what this tells us is that over the course of the last 3 years, cryptocurrency has not become a mainstream form of payment. It is still not commonly accepted as a form of payment, and the majority of people and companies are not holding any of their assets in Bitcoin. And I think there is still a major question mark as to whether or not cryptocurrency will become a mainstream form of payment, or whether it's still seen as being a highly speculative and high-risk investment vehicle. But of course, like any currency, crypto is actually designed to be a payment method rather than something that you invest into. And as we've seen from today's video, there are still major flaws in the way the market operates, and that enables criminal activity to go undetected. And we've got things like tumblers and mixers, which are an unregulated way of being able to launder your currency to be able to wash it so that nobody can trace it back to where it came from, and therefore you can legitimately use it. And that, of course, is a major problem in terms of the world of finance. If we look at the traditional world of finance, banks and financial institutions, it is now very difficult to get away with money laundering. You might be able to do it for a short period of time if you set up a fraudulent company, but ultimately it's likely that you will get found out. However, as it stands today, the world of cryptocurrency is still not regulated by every country in the world. Over the last couple of years, the USA has started to regulate its market and has cracked down on a lot of different exchanges and sanctioned lots of businesses, including tumblers such as Tornado Cash and Blender. However, until the rest of the world follows suit and introduces regulation in its markets, it's still going to be possible for criminals to be able to introduce Bitcoin into the system, wash it through in a tumbler, and then be able to legitimately use that cash. And I think this still represents the single biggest challenge that cryptocurrency is facing. Until it's regulated across the whole of the world, then it's unlikely that it'll be accepted as a generic form of payment, because you simply won't have a way of distinguishing between clean crypto and dirty crypto. So I think until we get to the situation where the regulators around the world join forces and put together some sort of comprehensive global plan, it's unlikely that cryptocurrency is going to go mainstream. So hopefully you've enjoyed today's episode, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.